What's up, everybody? Welcome to another episode of Bootleg Weekly. I think we're on episode number 4 right now, and we're joined by our favorite, Matt Capital. How's it going, Matt?
I'm here for Roy. So let's start with Roy.
We're all here for Roy, yeah.
I'm actually here for Matt, so I don't know.
We're just a bunch of guys here for each other. How about that?
That's right, yeah.
A great start to Bootleg Weekly number 4.
What a note to start on. I'm so glad I had both of you guys on. Yeah, this is great. Let me make a tweet. I need to tweet this out so you guys can talk about stuff.
Yeah, so it's one of those weeks where there is so much news out, we don't even know where to begin. So we're going to be kind of all over the place. That's the thing. The Bootleg Weeklies, we'll talk about all sorts of different names, and some weeks, not a lot of stuff happens, and then there's weeks like this where you have Bitcoin just ripping off the face of the planet. You have Google stuff. You have Google stuff like every week. You have stocks going to the moon. You have, of course, there's always stuff with macro. A lot of companies reported earnings, which are very significant. One that both of these guys are interested in, I believe, is reporting tomorrow. Snowflake melting off the face of the planet, which I love. Frank Slootman resigning. We got a lot of stuff going on. So it's not been a boring week. So how's it been, guys?
I will say
Snowflake news.
Yeah, I was pretty surprised. I don't know if I saw it on X or what, but yeah, that was very surprising. Was not expecting to see Slootman announcing his retirement. I didn't listen to the earnings call because I was working a little bit late today, and then I have an early day tomorrow, so I wasn't planning on making a video or anything about it like in previous quarters. But that was pretty crazy. Did you hear exactly what happened, Hot Roy? Is he just retiring? Is he throwing in the towel? What's the deal?
I think the biggest thing is he just knows that he can't compete with Alex Karp and his fine hair. And so even though they're not really competitors, they're barely competitors, he just Alex Karp has this and Elon Musk is going to do everything else. So I'm just out. But no, seriously, I don't know what it is. I just know I've not even listened to it. I just saw the headline and I saw the stock price action. I've been busy since then. I've never really loved Snowflake. I think it's a good company, but in the Palantir community, for some reason, there's an irrational hate towards Snowflake. And I feel that hate. So I feel bad for shareholders. I think it's probably a good company. It may even be a buying opportunity, honestly, because it is a really solid company. But I'm not interested. I like to see snow melt. I'm a Texan. I mean, what can I say? That's what it's supposed to do.
All right. 2 things, housekeeping. Also, did you guys hear that CRM, when they reported earnings, announced a dividend for the first time ever? What is going on? Like Meta dividend and then Salesforce dividend.
What happened to their stock after hours? Oh, Ethereum's popping up too. About to be rich. Okay.
I haven't seen Salesforce after hours.
We're in a bull market, boys. Just everything's freaking. It's not quite at the silliness time, the extreme of 2022, 2021. But I saw today, Webull is actually being SPAC'd. And it's is this 2021? Bitcoin's it's 60.
SPACs are back.
What in the world is happening?
All right. So, what's the 2 things? Housekeeping. Number 1, Steve is taking some time because he's focused on work. That's going to apply for probably all public appearances for Steve across YouTube, possibly for the next couple of weeks. But yeah, that's why Steve is not here tonight. And then second thing, what is the word today, Roy? What is so Matt, we have a game where every episode we have a word or phrase that we cannot say, and if we happen to say it, then we have to donate some money to charity. And your chat was my charity for last night.
So I would say crypto or cryptocurrency. Those are.
That's tough.
I was going to say bull, as in bull market.
Let's do that too. We'll have 2 words: bull and crypto or cryptocurrency, starting now.
It's not 3 words.
Yeah, I mean, you could argue that the first one is the derivative of the second one, but
I will say it's nice to know that I only got the call up because I'm the B team and Steve can't be here. So that's nice to for Uncle Tevis to hook me up with that.
You're not the B team, maybe.
It's a joke. I'm just giving you crap. All right. So those three words. I'll try my best. I'm very bad about, especially those are going to be hard anyway.
It's just pick a charity, Matt, because
and the amount is your choice. So whatever you want to do. No pay.
Okay, so let's start. We had a couple of topics that we wanted to cover. Interesting. We can talk about some of the FANGs. We have Google, we have Apple, we have Bitcoin, which hit 60,000. We have why did Matt Mula buy SoFi? We have Apple leaving the car business, and we had Unity's disaster earnings. And I think we can dive a little bit deeper into all of those. What would you guys like to start with?
Guest choice, I think.
Well, somebody just kick it off with the chat section. Does Matt have base card collection to show us? I actually do have Pokemon cards, believe it or not, but let's not whip those out. We'll leave that for when Steve does a famous return, and we can go through one by one. But man, what topic do I want to start with?
So let's start with just first of all, your SoFi position, Matt. SoFi has been a name that we've sort of talked about tangentially, but last week you actually dipped your toes in and purchased some SoFi. Since that time, I put up this chart that I made. Hold on, let me share my screen. I think you might be SoFi's lucky charm, because here is where here's where Mr. Matty Capital came in about 2 minutes before the close. And this has been the performance. I mean, I didn't capture today's performance because that was down. But look at that. Look at that very positive trend that we've been seeing.
Look, I don't want to talk too highly of myself because, I'm not the savior, and I don't want to be put on a cross. But at the end of the day, I figured it was time to save some bag holders and save some of those marriages out there. So with that, I decided to take a small ownership position in the account of Matty Capital. And with that, no, I'm just kidding. I think it's in reality, no BS. The thought process that I kind of had behind it, to give everyone the full backstory, I had actually, and you and I had talked about this before, Mr. Tevis. I actually invested in IPOE. I think it was IPOE, which was the SPAC that took SoFi public, and I think I sold it in the 20-ish range. I should actually probably pull it up so I don't misspeak in the future. But then I had bought some call options here and there when it was really volatile, all the way on its way down. But I don't think the last time I had probably touched it was in like 2022. And those were like really short, 1 week, 2 week. Basically when it was like going from the 20s all the way down to 6, that long trend line, there was a few spike ups in between there. So I made a couple $100 here or there, nothing extravagant, not like I was doing hundreds of contracts, nothing like that. And I've been following the company off and on, not as diligent as you guys have, as obviously, but, once a company gets to this point of crossing over, really adjusted EBITDA positive, and really once you get to the point where it starts to become GAAP net income positive, is really where you start to see the valuations really grow into their own. And so you see that a little bit, or at least most of the time, if they are on a downward trend, they at least arrest a little bit. And I think that that's what we've kind of seen and observed here for SoFi. Do I think the company is going to be the next JP Morgan? I think it's probably a little bit too early to say something like that. But, it's a $7-8 billion company. I think it has a lot of potential. Do I see it being a potentially $50 billion company? Of course. And so I think it's a great place to store capital. And I think with that, they're probably going to end up doing a lot of buybacks in the future. Obviously, we're not talking about, to give everyone a preface, I'm not one of those guys that invests in a quarter, 2 quarters. When I generally invest in and make positions, I hold them for a little bit longer term. And if I don't, then I cut them early. But, generally speaking, I don't enter positions very lightly unless I know for a fact. Like Celsius, for example, is more of a trade for me. But SoFi, I think, is one of those places that it's good to store capital. So I took the opportunity to look. It was like I had some Orsted, which I'd already made 25, 30% on. And then I had some Pepsi, which I'd done really well on, more on my dividend side of my portfolio. And so I was like, let me trim those opportunities there. I don't see Pepsi going up 4 or 5x from here, but I do see SoFi. And with Orsted, I see Orsted being a 2x by the time you get to the end of the decade. But do I see it going up 3, 4x like I potentially see SoFi? Probably not. So I just think for right now, SoFi was a much better opportunity and store of capital than having it within Pepsi. So Maddie Capital decided to take a small ownership position.
So how much did Tevis threaten you to make you buy that position?
Not financial advice at all.
Financial threats, but no, just kidding.
I want to preface this, but I did actually make several threats because he was thinking about it. He was going to buy in the morning, and it was at 8:11, and then it was dropping, and then he said, I'll put in a buy order at $8 or $7.90, and if it gets filled, it gets filled. If it doesn't, it doesn't. Whatever. And then this thing ran to, I think, something like 8:30, and then it came back down to 8:16. And he said 8:15, and it was 1 minute before close, and he ended up buying it at 8:16. And I was telling him, when I come back, if you haven't bought this, you better have bought it. That's all I'm going to say. And so, but I mean, look, it's good that you're in. I think trading it for one of your dividend positions, I mean, your portfolio is predominantly safer on that perspective. You have a large portion of SPY, you have a large portion of cash flowing businesses. And so, I think for you to balance that out with some growth names is definitely, it makes things more exciting, if nothing else. So is the play here, Matt, simply the fact that you're looking for that 5x? Is that sort of the range of what you're looking for? And then what's the time horizon for that? Like if SoFi were to go to 50 tomorrow, you'd be like, okay, it hit 50, cutting it. And if SoFi doesn't go to 50 in 20 years, so walk me through just like the relative, how you view that.
Yeah, I mean, if SoFi goes to 50 tomorrow, I'm probably out, right? I mean,
me both, but yeah.
I mean, let's just be frank. There's other positions that I like more than SoFi that I would likely put that in, or I would just park it in SPY, because the volatility is going to be much less. And ultimately, I guess to give everyone some roundabout, I used to be very much a dividend investor going into the pandemic. And then outside of the pandemic, I kind of hit a net worth goal that I was kind of arranging for at the 30-year-old range. And, with that, I kind of decided the more money I have, the more risk on I really wanted to be. So, I work in oil and gas, very volatile kind of business. And so, I was always trying to look for dividends as kind of that stability in my life. And the more money I ended up kind of acquiring, the more risk on I decided to kind of get. And it's just been kind of doing well for me in that respect. And so to kind of answer your question, if it goes to 50, then I would likely take that off the table, probably put it in SPY, because that's generally speaking where I store a lot of my capital. And it's kind of my piggy bank as well. But I hope to get closer to a very significant multi-million-dollar position in the S&P, just to be a good store of capital and kind of be that place where I park money in between making good, wise investment decisions and stuff like Palantir, Rocket Lab, some of the other positions that I really like. In terms of when I would cut the company, I think if the prospects of it, there's still some faults with the company that I still observe, right? Everyone talks about how it's much more nuanced and technologically advanced than some of these other banks, but there's still some small things that I guess for me are big. Maybe for others, there's probably bigger fish to fry. I think from what I've observed, the mobile application could be a little bit better. The money management business could be a little bit better. There could be more ETFs. I started seeing them go down that path, and it seems like they've kind of took the foot off the gas a little bit. I think there's a lot of non-margin income for them in that space. especially for the younger folks, as we've observed with like Robinhood and observed with Coinbase, being able to scrape up some of that differential between being able to get some capital between the bid and the ask price for preferential trade flow and stuff like that. So anyway, taking that step back, why would I leave SoFi early? Well, to be very honest, if I find a better opportunity, it is probably one of the ones that would be on the chopping block ahead of other things like Palantir, Rocket Lab, Dutch Bros as well. So if I do see something that's like a screaming buy, and SoFi is one that has already kind of made a little bit of money, I wouldn't be so inclined to, or I wouldn't be so upset if I cut the position. It's one of those lower tier positions for sure. So just to be completely transparent, hopefully I'm not crushing people's dreams here.
No, that's music to my ears. That if you cut it and you buy more Palantir, I would actually approve that message. But you have to make a video about it.
But what about Rocket Lab? What if I cut it to buy more Rocket Lab?
Maybe not on that one, but you have to tag this guy if you cut SoFi and talk about how Palantir will outperform.
I'm surrounded by Palantir people, man.
I love both stocks, but Palantir and then
you can't love both stocks when you're 80% in one of them. And
70 now. So SoFi, Robinhood, the Bitcoin, they've done well. So.
Look, so I don't know.
I didn't know you were so much on the Bitcoin train.
A bit, yeah. It's a small, like, I don't even include that in my portfolio, but I've got a couple of miners, and then I've got some coin, some Ethereum, and
congrats on the recent success. Then,
what do you do?
I don't want to get derailed by Palantir. I think like.
Well, we've already got railed by it, so no, I'm just kidding.
Yeah, fair enough.
I love this. We trade out Steve, who's bullish on Palantir, and
I cannot escape. The funny part is that I think that it's just like the timing was so unfortunate because I would still make that same trade, but except if I had done it at 20 or 25, everybody would be applauding it. But at 15, everybody's like, oh, like this is stupid or whatever. I don't know. I just think one has more limited runway in terms of the potential that it could be, and one is just earlier in its cycle where it hasn't seen a lot of that growth. So, I don't know what the growth rates are going to be. I don't know what the time horizon. Time will tell, but that, I guess, was the thought process behind it. Okay, shall we go into Bitcoin? This is probably the section where we are most likely of stumbling with our game.
You stumbled once already, buddy.
I did?
The chat called you out on it. Yeah, you'll have to do the instant replay.
I thought you did it, Roy.
Did I?
What?
No,
I think it was Mr.
I guess
Roy.
Chat, you can let us know. Was it me or was it Tevis?
Did I actually? No, I don't think so.
The B word.
I think it was you, right?
Oh,
the chat can let us know.
Yeah.
That's why I said because yeah.
Oh man, it was me.
Wah, wah, wah.
Oh man.
Okay, well I got an idea where I'm giving. So
is it okay?
Okay. Capital, the most charitable of organizations.
It can't be Palantir because that's where all your other donations go.
No. That just pays me dividends, man.
I did not say get out of here. The chat is gonna fucking troll us now. Anyways, I don't think I said it. I'll rewind.
Yeah, we'll have to do the replay.
Let's talk about Bitcoin. Crossed 60,000. I think it crossed 63,000 earlier today. I actually had a colleague at work because I went into the office today, and I had a colleague, and literally beside him on his main monitor, he had work, and then on his computer laptop, it was just like a huge blow up thing. It was just like the chart with like the candles. I'm like, and I turned around and I didn't see what the ticker was. I'm like, those are a lot of green candles. Is that Bitcoin? He's like, yeah. And I was like, okay, great. It was either that or NVIDIA. But yeah, really crazy run. I mean, we've sort of been forecasting this. We've been talking about it for a while. The writing's been on the wall with the halving that's coming up. Institutions. I mean, this is what I was talking about in August and September, why I've been consistently buying Bitcoin throughout the summer and essentially front running those institutions when the spot ETFs were still up in the air with regards to an approval. So, I mean, I don't know. Where do we think it can go? How quickly do we think it can go there? I don't think that, and maybe the chat can keep me honest on this, but I believe that Bitcoin has never hit an all-time high before they're halving. It's always happens after they're halving. So they start accumulating pre-halving, and then post-halving, it's sort of a 2 to 3 year positive cycle for them before they go back into their bearish cycle. But I think this time around, it's definitely coming back with a vengeance. I mean, cross 60,000, cross 63 before a little pullback. We'll see where it goes, but it's definitely seeming to pick up steam at a rapid pace. Thoughts?
Yeah, I mean, and we saw a little bit of the dip today, but like if people haven't followed alternative digital assets in a while, such as Bitcoin, like it's very volatile. People kind of forgot that because, you know, it was down, crushed so low for so long. And I mean, here it was $50,000 back on February 23rd. It just, that's not that long ago. That's not even a week ago. So it could absolutely come crushing back down, you know, to like 50,000, 45,000. It wouldn't shock me. But I think it's here to stay, but it'll be very volatile. I don't think we're going to have like days like this every single day. There we go. You know, every single halving cycle is a little different. And so this time we have the ETFs, which just looking at the buying power of those, it's more than I expected. I'll say that. I don't know if that's just because Bitcoin is running so well, or if this was always just going to be the play, or if they're trying to front run each other now that's going on. I don't know. I think there's a combination of a lot of factors. But between the ETF buying and between September being so far away, which is notoriously a very, very weak month for alternative digital assets, I think that this might be the time that kind of breaks history as far as it hitting that new all-time high, because we're not that far from it pre-halving.
69,000, I think, was the previous high for Bitcoin. So we're definitely getting close. Oh, so Harry, if you're asking what an alternative digital asset is, please look at the pinned comment and try to understand the game that we're playing, because we have limitations on what we can and cannot say. Thank you. But yeah, Roy, like this is absolutely massive. And what we've seen in other up markets, positive markets, is that the average people start to get into this cycle. And in fact, there's a lot of, average Joes that are trading this entire market, the alternative digital asset market, that probably bought in at a similar price to where we are right now and are finally seeing, green in their portfolio. And I saw this earlier today, and I just want to throw it up on screen because I think it's emblematic of what we are experiencing right now. The search volume for Bitcoin is just skyrocketing, going parabolic this week. And that's very highly correlated with what the price is also doing. And so you have all of these people who are buying at 20,000 or less, who are essentially in the midst of the bear market, accumulating more heavily. But now that we are reaching, are within 10,000 of the all-time high, we're actually seeing average people start to jump right in.
Yeah, I think it took a couple weeks for them to really start to understand that these opportunities were out there, that they're relatively low cost to get involved. And like I've been holding on to GBTC for quite some time, and unfortunately I'm kind of stuck between a rock and a hard place because it's run up so much now where it's almost 400% returns. It doesn't make sense for me to sell and move it into something that's lower sort of expense ratio, because at this point I'm already up and I would have to pay taxes on, whatever the gains of that are, which is, I don't know, it's not small, but it's not massive either. But regardless, it's I think now you're starting to see a little bit more of the people influx into these opportunities, in the billions of dollars over the past several weeks, and I think it's really starting to get to a place where you've didn't realize. I think a lot of people didn't realize that Bitcoin was up to the $50,000 mark, and now you're starting to see it even go up into the $60,000 mark, coupled with the ease of accessibility from like iShares having their own spot ETF to Fidelity to Bitwise, etc. You now have this access to digital assets that people didn't necessarily have in the past. And I remember trying to explain people how to acquire digital assets in the past, and their eyes immediately glossed over, and they never ended up buying anything. Well, the people that are diligent are now obviously reaping the rewards. And I've a lot of I don't have a lot of Bitcoin, because I guess even just having one is sufficient, but close to one Bitcoin, several Ethereum, and then some Ethereum Classic as well. So very excited to see where this next peak for Bitcoin takes us.
Yeah, I'm thinking that we probably get a pullback before an all-time high, but I was thinking we might hit the 60s, maybe like summer, and we're ways off from that. So I have no idea. It's always unpredictable. I do remember back in the previous cycle for these alternative digital assets that I had people at work, like we don't have anything to do with this sort of thing, but I remember at one point we had a team meeting and Dogecoin was brought up. And they were talking about Dogecoin and how so-and-so's husband bought like $1,000 worth, and they made $10,000 and they're going on this vacation. And somebody else every single week, one of the supervisors was messaging on Facebook, just like randomly, is like, should I be buying Bitcoin? And then it like went from like, should I to I should to I am, of course, near the top.
Dude, that when you start hearing Dogecoin in your office, in your workplace, like that's a top signal. Yeah, exactly.
Take some profits. We're not there yet, but I'm starting to hear a few things here and there. There's a lot of excitement and enthusiasm, and I don't think versus like at the end of 2022, a lot of people had written off Bitcoin entirely and just said, well, there's not like free easy money coming in the system, this and that and the other. It's going to 10,000. Some people like Matt loves zero, maybe not Matt, but other people were saying Bitcoin is zero. It's all fake. It's all a scam. And now that it's near the all-time high, people are like, oh yeah, it's clearly going to go to the all-time high. I knew it all along.
Yeah. And I think it's interesting, right? Because you have that discrepancy of these serious investors and institutions and the average person. And that could be a signal where, oh, this is a crowded trade. I have to get out because essentially the word is out. Or you can go the other way around and say, well, I'm going to try to find alpha in the average Joe that I can't find with, the market, right? I was talking to Matt about a week ago, and I was thinking about going heavier into Celsius and into on running. And I just texted a friend. I was like, hey, have you heard about Celsius? And they were like, oh, I love Celsius. And I was like, okay, have you heard about on running? And they're like, oh, actually, I haven't heard about that. What's that? And so that's, sort of one of my bellwethers to essentially vet out stuff that I'm looking for. There's a lot of people in my life that still have no idea what Bitcoin is, what it does, what the price is, how to buy it, more importantly. And so I think that the whole digital alternative asset space in general is still far from the mainstream. And one of the things that's going to bring it to the mainstream is the ETF scheme. So let me share my screen right here, because what we're seeing is the drastic volume from all of these ETFs far surpasses all of the supply. And that's really leading to the surge in price. Bitcoin ETFs smashed trading volume record with a huge day of 7.69 billion. The previous record was 4.66 billion on the launch day of the ETFs. And so here you can see the volume across all of the ETFs and what that looks like. And really, who are behind a lot of these ETFs? A lot of just average Joes, ordinary people, massive funds of, retirement funds, people who want exposure, but maybe don't know how to buy the digital asset itself, or maybe, they don't know enough about it, so on and so forth. And so this ETF now provides an on-ramp for all of these people. And that in itself is going to be leading to that surge in price, even in excess, in my opinion, very quickly, of the all-time high that we've had previously.
And I think a lot of people, people in the chat are asking what's the utility of some of these opportunities. And if you've never really left the country before, I like to tell this story because, it's tried and true to my heart. In 2019 and 2020, during, right before the pandemic, I was living in Trinidad and Tobago, helping the country make liquefied natural gas. And really, it's a country that imports a lot of goods, but you have 3 or 4 main large businesses that help do a lot of that importing. And so where do they import a lot of their material from or their goods from is the United States. So generally speaking, for anybody to import anything, nobody really cares for or accepts the Trinidadian dollar, unfortunately, right? Even though great country, most transactions, including the natural gas and oil and everything that comes and gets exported from Trinidad and Tobago, generally speaking, comes in, US dollar. It's what most people use is the petrodollar for those opportunities. So for anybody to bring in goods, they would need to go to some of these Canadian banks. Well, all the US dollar is hoarded up by PriceSmart, which is their kind of Costco. There's a couple other big stores and companies that utilize all the USD. So for any of these people, they would have to sometimes wait weeks to be able to get $100 here, $100 there. Well, what's the other opportunity is that they are able to use digital assets to be able to go back and forth and trade amongst their friends in the US. And you see this also very prolifically in Western Africa as well, to be able to do that as well, where people will actually pay at a premium to get Bitcoin and many other digital assets just so they have the opportunity to trade and be able to make that opportunity. Because, sometimes the currency sometimes the monetary, what's that?
The ADA?
Yeah, sometimes, yes, the ADA that they're able to use, or sorry, the government aid, the government
fiat
asset, yes, the government fiat that they're able to use is not trusted. And so therefore being able to, and Amit actually talked about this recently when he just did a transaction with somebody, that was the easiest way to go ahead and do it, because some countries won't allow you to go from let's just say the US dollar to their particular currency. So what's one way to not have any governments or banks involved? What's that?
You said it the second time.
I did. Sorry. What's one way to not have any governments or banks involved is to utilize digital assets. So
yeah, and I think that even the transactional phase of digital assets is one thing, and that's sort of the medium to long term positive case. But the short term positive case is really a rush to the exits, so to speak, because all of this money is coming in. You have a huge influx. And right now, the people who got in at the ground floor, people who have been positive on ADA for the past, decade, so to speak, they're not the ones that are selling. They're holding. And this thing is emblematic of the entire use case, the moat that it has, where the supply is fixed. And what happens when the supply is fixed and the demand is increasing? Well, obviously you're going to see the price increase, right? And so I think that it's something that will create FOMO in people. People will see this going up and they will say, okay, the positive market is back. We're out of the bear market. And as a result of that, I need to get in because now it's going into all-time highs again. And so, individuals want to front run institutions. Institutions are, buying regardless. I'm so nervous that I'm going to say the words, but institutions are buying regardless. And really, it just seems to be this snowball effect that just keeps on dominoing and will do so past the all-time highs and will drive this thing even higher because it is just a rush for those exits. There's a limited supply and there's a very strong demand.
Yeah, it's all about supply and demand right now. And the other part of the long-term digital asset play is it's programmable, it's traceable in the ledger. It's a trustless system, so you don't have to hope that you didn't get counterfeit, whatever. It's a good system, and eventually, I think the world is going to go that way. Whether that's Bitcoin or some other alternative digital asset that has yet to be created, that's up for debate. And I think the U.S. will be one of the last countries to adopt it because we really benefit from the petrodollar. But you have countries like Argentina that, if you look at their monetary system, it's been a mess. And yes, they're switching over. I can't remember what they call it, but a dollar-based system under Milei. But they're certainly interested in Bitcoin in that country and other alternative digital assets because their currency is hot garbage. As bad as our currency situation was hit with the massive printing of dollars and the inflation that resulted. I said currency.
Bro,
all right, yeah, I'm gonna donate my whole wallet, I guess. But yeah, as bad as it is, we didn't see anything. If we're in the United States, it's like we had it relatively good compared to the rest of the world because the dollar is all over the globe, so we could level out that cost throughout.
Yeah. Shall we move on? Because we're over halfway through the pod. Shall we move on to our third topic of the night? Matt, you will have a vested interest in this because I know you're a shareholder and I know you're bullish regardless of what's happening in the market as a long-term hold. But there's a lot of news that's been coming out around Google recently. The CEO, in fact, addressed the the news that's been coming out around Gemini and Gemini having racial bias embedded into a lot of their AI models and the results that they're giving. Basically, let me just give the primer. Sorry, I think somebody said I said bullish. Fun. So basically, let me just give the primer, the backstory. Gemini was released. It was formerly known as Bard. Bard was kind of shit, and they rebranded it to Gemini. Overall, it's a rushed product launch, in my opinion. And the reason why is because it has needed such overhauls. They rushed Bard. People were noticing in Bard that they had factual errors. People on Twitter found this out. They were asking it some pretty basic questions and it didn't know. This is back when, ChatGPT was released, and immediately after, people were comparing Bard to ChatGPT. And then what Google did was they rebranded this to Gemini and they released this demo video, which blew everybody's minds. They're like, holy crap, Google is in this race. And guess what happened? That video was proven to be fake after the fact. It was not real time. The prompts were different than what the prompts the guy gave in the video. It was sped up. So that lowered trust with people. And now the trust is already lowered. And what happened is Gemini's image processing, people found out on Twitter that it had this entire racial bias built in. And this caused such an uproar. I think Elon was tweeting about this consistently to basically say, criticizing Google. And Sundar Pichai, the CEO, later yesterday, I think, or earlier today, released a note himself to personally address this because there's been a growing amount of concern over the haphazard launch of their entire AI segment as they're trying to play catch up in this market to be competitive. But the fact of the matter is that they've stumbled at every step of the way with regards to Gemini. It is, in my opinion, a piece of shit by comparison to the other AI competitors that we have out there. And the buck has to stop somewhere. And it's, the market is looking at Sundar Pichai's leadership, and he's going into some hot water. because people are now comparing him to Satya Nadella and the legendary move that Satya Nadella made with regards to Sam Altman and keeping him on and what that all looks like, when the whole OpenAI fiasco happened. And so put all these things together, and Google has been breaking away a little bit from the Mag 7 from a performance perspective. They've been pulling back when a couple of these other ones have been roaring to all-time highs, namely Microsoft, for example. And the overarching criticism is, to what extent is this wokeness embedded in the AI pervasive? Is it something that spans across the entire executive branch? Is it something that, is at the head, the leadership is the problem, where Sundar Pichai can't unlock as much shareholder value as a potentially new CEO? Or is it something that is a tweak that can potentially be fixed with the model and Google, will be okay? I think, well, let me sort of open the floor and then I'll share some of my thoughts on it.
Well, first and foremost, I want to take an opportunity to say that if it's lagging behind that Magnificent Seven, you're obviously leaving out Tesla, which is down 4% over the last year versus Google being up 52% over the last year.
Dude,
So that's just stating. I let you talk. You can let me. So that opportunity to basically take a jab at Google, I think when you have a lot of people piling on to something, generally speaking, it's kind of orchestrated, right? And I think that being stated, if you look at things and you're able to actually see the forest through the trees, a lot of these things are very iterative, and you need to train these things. I don't know much about AI, but what I can say is when you interact with these opportunities, then they get stronger and better over time. I don't know about you guys, but I just did a brief comparison between Chat GPT 3 5 versus Gemini, and I got slow folks initially started poking back and say, well, Chat GPT 3.5 is not Chat GPT 4. Well, I'm not going to pay $20 a month when I can use Gemini, which is free. So, at the same time, I'm going to compare a free product versus a free product. That'd be like me comparing HBO to normal cable network news, right? Like that doesn't make any particular sense. I'm going to compare the free product versus the free product. So I don't like to hear the fact that these things are years behind, when just 2 or 3 years ago we were hearing how there was a Google engineer who literally quit his job over some of the artificial intelligence within Google being almost sentient and having its own feelings and having the ability to almost feel like it was a human being. So I think that there's just a large spotlight from a negative press perspective, and people are piling on. And I think within the next 2 to 3 years, they will be sad that they sold their shares.
Yeah, I have not been optimistic on Google for a while, and it comes down to leadership ultimately for me. I guess, would you agree with this, Matt? It is, out of the Mag 7 CEOs, would Sundar be the weakest at the moment, the worst? He's still very good, but the worst of the 7? Or would you put somebody else, and if so, who?
To be very honest with you, I don't know much about any of them. I've never worked with any of them personally. All I can see is what basically the media provides.
Yeah, as far as Sundar, I've seen, it just seems like Google is aimless and a bit asleep. Like I started seeing warning signs of this a good while ago, but I was like, it's Google. They're very strong. They have a lot of strong products still. They'll continue to print money. I think that long term they'll continue to go up. I just think they'll underperform the rest of the Mag 7, which is not bad. Like it's probably index level returns.
And what time frame though?
Over the 5 years. 5 years.
5 years.
Yeah, like 1 year, anything can happen. Who knows? But no. From Sundar's perspective, I see a lot of just weakness in him as a leader. That Google reminds me of a company that I've invested in and has not done well at all is PayPal. PayPal got into this thing where they were the industry leader. They were the undisputed industry leader, and they kind of took their foot off the gas. They relied on mergers and acquisitions. They released and updated and upgraded a lot of products that weren't just very good. And their leadership was focusing on not just Schulman, but others were focusing on secondary issues. So cultural issues, misinformation, the Canadian trucker stuff, that seemed to be more of their heart and focus than actually focusing on their main product. And of course, they had a bloated employee budget, and they just all their products weren't running seamlessly. They lost their leadership. Frankly, they're still strong. They still print cash. They have a massive free cash flow, and I see a lot of the similarities with Google. Google is still the leader in a couple of categories. Search, undisputedly. YouTube as well. I think their cloud platform is not amazing compared to maybe AWS. Azure, I'm not as sure, but they're going to benefit from AI there, so no problems there. So they'll do well, but I just think that they're going to underperform the rest of the Mag 7. Just they don't have the innovative culture that they had when they were founded. It's easy to lose that. They focus on secondary items, and I see a lot of warning signs within their work culture. And Sundar, I don't think, is a guy to fix that or to give that writing vision that drives the company forward to higher highs. I mean, they'll improve, but I think they're just going to lag under him. Now, if I am optimistic, though, that these challenges, and there is definitely a challenge to his leadership. I made a post in January, and I was kind of lambasted that, thinking Google was going to underperform the Mag 7, and now other people are kind of with me. And I think it is a concerted effort, which may lead to Sundar's departure. And if they bring in the right guy or gal that is able to do what Sundar's not able to, Google could do phenomenally well. They have to get focused again and really focus on that culture innovation. Some people have to be let go that are just there for secondary items, not actually focused on what Google is all about. And so I'm hoping, actually, in an ideal situation, we get there's a possibility. I don't think it's likely, especially in this market, but there's a possibility we get a Meta-like situation at Google. I'm not saying 88, as far as the price, but if it keeps falling and then Sundar departs and they bring in somebody credible, I may be buying and going along Google. We'll see, but we're not there yet.
Let me just bring up some points, because I think, and I agree with a lot of you guys, it's not that I am inherently bearish Google at all by any stretch of the imagination. I think that a lot of these Magnificent Seven, which when I think Mag 7, Matt, I exclude Tesla because of it's just completely detached. But when I think of it, I think of them as a snowball effect. They're so large. They have so much cash on hand, so much operating leverage that it's hard. It's going to take more than just a hiccup or two for them to fail. And so let's put that to the side. I'm not negative on Google. I'm just trying to be critical. I think that there's a lot of things, though, that are stacking up against Google. And that's why Sundar Pichai is getting all of this criticism. Because when OpenAI released ChatGPT, what was the main argument? It's that GPT is so revolutionary that this is going to change the way that search is done. And as a result, is going to displace Google from a market share perspective, because Google makes their money on ads and people have to, search for stuff to click on the ads, and GPT is just giving answers. And then Google released their AI, and it was like, hey, the AI is woke and all this stuff. And the prevailing sentiment that I'm seeing out there is that all of this, particularly with the recent hiccups in Gemini, is affecting the market's trust in Google to be as objective as they possibly can be as a search engine. Because when people start to think and associate Google with heavy levels of curation, if I think Elon was posting about this, where or he retweeted something or commented on something where, somebody is searching for, a criminal or whatever. And it's like all of these pictures of one race are coming up, and they're searching for something else, and like all of these pictures of another race. And so when you have high levels of curation like that, people are going to start to lose trust in that objectivity, similar to news networks, right? You can't, news networks are this to the extreme. You can't trust what they say because there always is a bias. If you look at the same exact event, the factual event, if you look at it on Fox versus on CNN, you're going to get two very different stories told. And I think that's the more worrisome undertone for Google going forward, is that if people start to lose trust in Google's objectivity, I mean, you could argue like, what are they going to do? Are they going to go to Bing? But still, my point is like it degrades that credibility with their core user base.
And as far as the engineer, I'd heard that, and I had not actually researched that. I watched some interviews. He actually was fired from Google. The guy that had said, is near sentient, and listening to him, it's listening. I could be wrong. He didn't sound very credible to me, frankly. So I don't know that I actually buy that. It seems like most things that come out of Google is the hype is way up here, and then the reality is way down here, and that's not good as a business. Google used to be the opposite, where there wasn't a lot of hype, and then it just blew people out of the water. And so it's a different Google than when it first IPO'd.
Yeah, and I think that level of curation also extends to YouTube as well, right? Like you had during COVID, where a lot of people who were reporting something that was against the status quo were all of a sudden getting demonetized, getting flagged. Some of them were getting their videos, taken down altogether. And I think this is just a wider point that I'm trying to make is once you get that level of, I don't want to say censorship, but it is to some degree heavy curation, then that's not really, that influences the product itself and how people view the product. And I think that's something that can over time denigrate trust.
Interesting.
Thoughts,
I just
Matt?
think, I think people are always thinking that this whole chat, GPT or AI search bot, is really going to hinder Google's long-term ad business. And it's like, what do you think you're doing when you type into Google? You're just typing a question, or you're typing a piece. And how is that so much different than these prompt bots that people are? It's like they're going to be able to put ads in between, just like people are like, how are they going to monetize Facebook? It's like, well, between every 6 or 7 pictures they're going to put an ad, and then it's every 5 pictures, and it's going to be the same exact thing with a lot of these. So it's not going to change. Advertising is always going to be advertising. It's just going to transition its business, just like how people didn't think that Amazon was going to make a lot of money with their with their Prime Video, and now they're putting advertisements on that. So I think a lot of people are just being a little bit naive when it comes to Google is going to be completely dead. They have 178,000 people. Yes, I can understand the piece where they get a little bit bloated, and might end up with, really, I guess, culture, not culture shock, I guess, but like culture festering, where things just kind of eat themselves from the inside out. So I get that piece, but I just don't think we're there yet. And I see this happen time and time again. People said the same thing about Microsoft when Ballmer was there, and then you had a great person like Satya come in and really emphasize the cloud. And who's to say that you're not one CEO away, or just a quick move or a few moves away from being a great business once again that's absolutely dominating. That also being said, it's hard to stay very bearish about a company when its search business is growing at double-digit growth, its cloud business is growing at mid-20% growth, and its YouTube platform is one of the largest growing pieces as well, with YouTube Premium or whatever having like over 100 million subscribers or something like that. I think that it's still in its infancy with respect to some of these avenues that they're chasing revenue growth. So I think this is just a little bit overblown. This too shall pass. I think it's going to be one of those things that they're probably bringing up so that they can hide something else in the media, like they always generally do. Who knows what the heck is happening, other than they continue to remove more and more of Trump off of other ballots and stuff like that. So maybe that's what they're trying to hide. So people don't riot or something in the streets, but that's just a different story for a different day. And this isn't a political discussion. So,
yeah. But Matt, so just your overarching opinion then on Sunder, because I think you're predominantly bullish. You're predominantly positive on Google. But what do you think of Sundar Pichai? Like, do you think he is Google's Ballmer, or do you think he has been steadfast operator that has been maximizing shareholder returns?
I think that there's people that are truly coaches and truly bullish for internal, and then there's people that are very externally facing. So, you have folks that are like a Satya that I think probably can do a little bit of both, and then you have people like a Sundar, which I'm sure gets the internals of the company fired up, but when it comes to looking externally, he might not be the most eloquent speaker. He's done a lot of great things. He's done a lot of great things while he's been at Google. I forget what exactly the products that he's helped kind of create and he's run, but from that perspective, he was able to execute, and those have been probably very good money makers, if I recall. From that, obviously, Larry and Sergey are not dummies. They wouldn't let him hold the reins if they didn't think he was competent. So obviously, he had the trust of both them as well as many of the other employees and directors within Google. So, I anticipate it's just one of those things where, people externally just unfortunately don't like him, and eventually they'll find somebody that will replace him, whether or not they do as good of a job or a better job than Sundar, I guess, is beyond me. But, there's a time and place for a lot of CEOs, and, you have your outward facing CEOs, you have your inward facing CEOs. And to be honest with you, the company has done amazingly well. He's been there for quite some time at this point and has led it through a pandemic, and the cloud business has now returned profitable. YouTube has grown extremely well and under his leadership. The company has grown massively over the past several years in terms of revenue and net income. They're buying back $75 billion a year in terms of, so I think it's hard to say that this is really that bad of a company. When you're talking about CEOs, he is probably deserves to be within the top 100 CEOs in the world. Sure. I think it's just when you're comparing them against, some of these other companies, you're literally comparing the best. It's like saying that Chris Paul isn't the best NBA player. It's like, okay, well, he's still probably, one of the best and will probably make it to the Hall of Fame, right? So it's kind of like, it's real easy for us to, be armchair quarterbacking, or in this case, back office CEOing and being like, this guy sucks. But I mean, he's done a lot of great work, and I think he'll continue to do well. And if Google and Larry and Sergey and many of those other founders that have all of those shares to make those decisions come up with the opportunity to change them, if they so see it fit, I'll agree with them. They know a lot more about the company than I do, but what I know about the company is that it's going to continue to print cash.
It will. I think that Larry and Sergey thought now was a time for a Tim Cook operator, and he's maybe not quite as good as Tim Cook, and that would be true if it was in the middle of an AI arms race. They can't afford a Tim Cook right now. They just can't.
Yeah, I'm not the biggest fan of Tim Cook. I mean, people that have been watching the channel for a while know this. It's just Tim Cook is the guy you bring on when you're like everything is going smooth, and he's like an operating efficiency guy. He's like an operations manager. They need wartime CEOs. They need guys who aren't afraid to take ballsy bets, who can move quickly, and it just can capitalize on that momentum, especially because the landscape is so dynamic at this point, and it wasn't that way, or it was less so that way, a year or 2 or 3 years ago. Moving on to, are we good? Do we have time to talk about Apple leaving the EV business? Matt, how are you feeling?
Chris isn't on in the back end yet, so we're good.
All right, so let's see if we can cover this. Apple announced recently that they are canceling their Project Titan, which was their 10-year initiative that they tried to hide. They tried really hard to hide, actually. They had different offices and anonymous logins. They hired all of these execs from car companies. It started in 2014, and they finished it in 2024. The famous Apple Car project. And, Apple stock went up on this. Apple stock went up. Tesla stock went up. Elon commented on this as well. Obviously, less competition for Tesla. it's even perceived competition. I remember, I was invested in Tesla back in 2020, 2021, where news would leak from Project Titan and everybody would say, well, wait until Apple gets into the game. They're going to eat Tesla's lunch and so on and so forth. And even back then, I was saying the likelihood of this happening is so small because essentially this is not Apple's core competency, right? It should have never been on their plate. They should have never shifted their attention to cars in the first place. Not to mention that cars are lower margin, right? Like Tesla, I think their margins are somewhere between 5 and 10%. On their very best quarter, it was like 16 or 17%, something like that. And so Apple's margins are like 50%. And as they, dive more into the car business, their margins essentially are going to get blended and they're going to fall as a result of that. The other thing is that like Tesla already has a really wide moat. I mean, they have full self-driving, they have their vertical integration, they have their gigafactories, and Apple will need a lot of CapEx to compete in this space. They would probably need to lower prices to be competitive. It would be a war of attrition at the end of the day. And for what? For lower margins? It's just not worth it. It's not their expertise. It's not their core competency. They could never realistically compete. And it's probably why this project took 10 years and nothing really manifested from that. Now, the positive, well, let's go with the negative first. And I'm also like sharing, my thoughts, but then I'll get the panels. The negative is that Apple spent a lot of time, they spent a lot of money, and more importantly, they spent a lot of mind share on Project Titan. And the positive is now that this is off their plate, the special projects team, all of those engineers are now pivoting to AI projects. So generative AI is what they're focused on. And I think that's something that they can embed into their existing ecosystem. And that's something that can benefit existing shareholders because it is closer to their core competency. And so all around, this was a really interesting, fascinating scenario where it benefited Apple and it benefited Tesla, and both stocks sort of went up on this news because the market realized, exactly what I've been saying, that Apple should have never been in here.
I think it's a pretty interesting take that you have there, Tevis, because aren't you just stating with Sundar that he needs to take more big bets, like creating something out of nothing, and here you are now kind of stating that Tim Cook made the wrong decision by going ahead and doing that. I think it's kind of like a flip-flop a little bit. It's pretty interesting. I think just to reiterate on that a little bit is like not all people and not all companies need to focus. And I remember having a conversation with you kind of in a similar realm of like talking about why doesn't Celsius go international? Remember? And we had this conversation of, well, why don't you just double down on the US business? It's 300 some million people. And so it's an interesting kind of topic to kind of talk about, because when you look at something like an Apple and now focusing in on some of these other opportunities and doubling down and maybe making them more profitable, it's kind of going back to the Google thing where it's like they're the ones that are kind of being steadfast and focusing, but we're talking about Apple now. So I think it's a little bit, a flip-flop there. But the thing that I see here is I'm a little bit surprised that they're working on it in general. I'm with you there. The low margin piece of the business, it didn't really make sense. It didn't seem like a strategic fit for them. I was trying to understand how that fits in their ecosystem. That's something they're hugely about. And I think that that's all ultimately why it failed, right? I think Apple has been very good about understanding its consumers. It's been very good about understanding how to continue to expand the ecosystem. And it just seemed like the car is just a little bit too far-fetched for them overall. So to me, I think that the cultural fit wasn't sufficient enough for it. And so I think their time is best, fixing the damn Siri on the phones. Like it hasn't changed much since 2008. And I said it and it didn't even pop up on my phone. So this goes to show you how well it works. So to me, I think it's time for them to take advantage of that, I think, and put some engineers on that. And I think they're behind a little bit when it comes to voice. I think they're behind a little bit when it comes to AI. And I forget who it was. I don't know if it was Carlos or if it was Chris that stated that they think that we're going to be very surprised by how much AI increases within Apple's organization over the next couple of years. And I hope so. I'm an Apple fan. I use their products. I've never invested in them just based on the fact that for some reason I'm fearful that there's going to be some like mind product that comes out that Elon's going to create, and Neuralink is going to take over, and their 50-60% of their business is going to disappear overnight. But that's obviously had me wrong as an investor since 2014. So I'm the dumbass when it comes to that. But I obviously own them now through my ownership in TQQQ. But that's a different story for a different day. But I agree wholly with what you're kind of talking about there, Tevi. I think the car just didn't really sit for me. I was surprised when they started announcing it about a year ago, actually to the public markets, and not so surprised that they're canceling it at the same time. So,
yeah, absolutely. And
bullish for Tesla.
Just to respond to that, I think that so a company like Celsius needs to focus, right? They need to double down on what's working, and they need to exploit what's working so that they can maximize that growth. A company like Apple and Google can very well have a special projects team that's outside their core competency. What I'm saying is, so two things for Apple. Number one, the car business is so far spread out from the phone business that even if Tesla came out and said, hey, we're starting a phone and we're going to take Apple's market share, I would think it's equally as crazy because, again, it's not their core competency. Whereas Google, for example, is making projects that are complementary to their ecosystem. And so this is the difference, number one. Number two, they're one of the top 5 companies in the world in terms of market size. How did it take them 10 years before they pulled the plug on this thing? Right? Like, yeah, sure, you can have a wartime CEO that is making quick decisions, that is aggressive. I'm not saying Sundar Pichai is not that. I'm just saying that's who Google would need at this moment. That's who all of them need. Tim Cook, I'm saying, is also not that. Tim Cook is that person who optimizes slowly. And so 10 years, come on, man. Like, you should realize this, 1 year, 3 years, hell, 5 years in. You don't wait 10 years to pull the plug on this thing. It's just embarrassing to the reputation that Apple has in the market as being one of the highest performing, stocks in the market, companies in the market. So that's, I think, my thoughts on that.
Yeah, I think it's very bullish for Tesla too. Just there's only one Elon Musk. Tim Cook is not Elon Musk. They're clearly the leaders of the EVs, and I would say that at least compared to Apple, they are likely have a substantial lead in AI as well with Dojo. So I like that. Now, I was kind of actually thinking with Apple, they should have pulled the plug long ago, but they have massive cash. And one thing it shows is their long-term horizons and their patience, that they're willing to lose money if they think a project is worth it long-term. I don't know that they want to even be in the car business, but if they do, what they should do is just buy Rivian. It's a 10 billion market cap. Let's say they throw 20 billion at it. And there's cash burn, yes, but guess who has a lot of cash? Apple. The other thing is, a lot of people that love Rivians do not love Elon Musk. Don't, and it's a really high quality product. That's one thing I hear is it's got almost an Apple-like cult following. I think even stronger, more so than Tesla. It's kind of like Tesla in the early days, and it's known for its high expense. There's a high expense to it, but it's high quality. And Lucid, no. I mean, they could buy it, but I don't know about Lucid. They don't seem like they can ramp. Rivian seemed like they could. They're going to need a lot of time. They're going to need a lot of cash. So I don't know if they should do it, but if they're still remotely interested, they should just buy Rivian.
Doesn't Amazon already own like a huge stake in Rivian, or a partner or something?
It's not as big as it was. There's been dilution there. I would have to look. I think it's under 10%. I could be wrong on that. But when they initially IPO'd, it was higher. And Ford had a lot too, but Ford's either sold out or they have a very small position now.
Yeah, I mean, the Rivian stake that Ford owned became like their highest performing asset ever when this thing IPO'd, and it was like over $100 billion in market cap.
Yeah,
and it's just insane, man. The market is a freaking casino. But the interesting piece around this Project Titan thing is because since it's been around for so long, 2014 to 2024, if the famous story about the Tesla 2017 bankruptcy crisis is true, and Elon actually did call Tim Cook. Tim Cook denies this, but he's going to deny till he dies, essentially, because that's the play. You're not going to admit that you missed out on that opportunity. He says, "Oh, I don't remember this meeting," but like, who would forget that meeting about Elon calling to sell you Tesla? That was in 2017. Project Titan started in 2014. By the time they got ramped up and all that, they hired some executives from legacy manufacturers. I don't know, man. I just think that, George highlighted in the chat, ego, that probably has a huge part of it. A lot of these companies that we're seeing, as they get larger and larger, have cash piles that are in the hundreds of billions. Ego, sets in. It's just, we've had a time of like lower competition. The space is monopolized to a large degree. These companies are cash cows. There's that expression, war keeps your army trained. And these companies just have not had war in so long. And I think AI is, just to exhaust that analogy, going to be that new battlefield because it's so uncharted. It's so fast paced and highly changing. It's volatile. And it's going to allow these FANG companies a chance to capture that market share. That and the spatial computing space, which Apple and Meta are going head to head at. And so for a decade or so, they've just been reaping profits, collecting cash, and haven't really had a chance to actually be battle tested. And they've gotten fat and they've gotten lazy, and they're not in shape anymore to that same extent from an innovation perspective. Don't get me wrong. Matt, I think you have to hop.
I do have to hop. I appreciate you guys hanging out with me and having a great conversation. I look forward to coming on next week if the B team is still allowed, if Steve's not here.
Thank you, Matt. Appreciate it.
Yeah. Thank you, guys. Talk to you guys soon.
Yeah. Roy, do we want to talk at all about Unity, or shall we wrap here? What do you think? How's your schedule looking?
Yeah, I've got a few minutes. You want to hit the highlights?
Yeah. So Unity reported earnings, and oh boy, it was such a disaster. The company did beat on revenue. They had sales of about $609 million versus $551 million expected by analysts. The thing to note here is that while the beat on revenue is one of the only positive numbers in Unity's earnings, they only beat because they also got proceeds from a sale of an asset that they basically overpaid on in previous years. And they're just offloading now that they have a new CEO, Jim Whitehurst. So whatever, beat on sales. Without that asset, they would have missed on sales as well, missed on EPS by a big number, lowered their guidance. And overall, I didn't really hear major talk of how they're going to take advantage of AI, which is what I wanted to hear. Unity is really, really lucky that they're in a duopoly, because if they were in a perfect competition, they would have gotten slaughtered years ago.
Yes.
They're very much struggling to find their footing. I think it's a cruise ship, right? You have to turn this massive cruise ship around from an initiatives perspective. They have thousands of employees, and they have to unwind all of Riccatello's bad decisions that he made, all of the bad acquisitions that have diluted shareholders. And in fact, they've struggled to capitalize on their platform, and their core value proposition is amazing. It's still leveraged by about 69 to 70%, of all mobile games use Unity. But barring that right now, there's not really too much to love. It's, a company that's under construction, so to speak. It's got the scaffolding around it. It's not open for guests, for tourists. They also did they got rid of their digital twin business, which was a big bull case of mine. And I don't really know how to feel about it right now. Capgemini is also going to take on Unity's professional services arm, their digital twin arm. And this essentially was a part of the enterprise business line, the bull case around that. I have a quote here from the CEO, and he said, quote, "Unity has reached a point in its growth where the opportunity for us in the enterprise market has outpaced our ability to scale fast enough to meet client demand. With its scale and breadth of services, from design and engineering to business transformation and data expertise, Capgemini is well placed to unleash the full potential of Unity technology for enterprise clients across industries with specific use cases. Basically saying, hey, these guys are going to do what we failed to do. And so the bull case for Unity was always, and if you, go back, I have videos like in 2021 about this, where the core value proposition was gaming space specifically, particularly in mobile. And then the midterm case of, the next 2 to 3 years was the enterprise space. Unity works with, 9 out of the top 10 auto manufacturers. And this digital twin business was a big part of that because it was a platform that essentially allowed them to render and use their real-time 3D engine to essentially mock up, in this case, vehicles. But it could be used for aerospace. It could be used for all the things, all the way down to like animation, right? And so that was a big part. And then the long-term bull case, 5 years out, was really the AR space because they are the prime pole position to take advantage of that. And so right now, with the sale of this Capgemini business, that really, puts a hamper on the entire bull case from an enterprise perspective, which should lower a lot of the total addressable market.
You said it. The B word.
Oh, yeah. We all lost the game at this point.
Yeah. No, I had mentioned to you privately that this and one other were my top 2 picks. If I had to choose right then what to invest in for the year, looking at adding 1 to 2 names, Unity was one of those. And I'm glad I did not invest. My concern has always been that management, but I thought Riccatello departs and they'll bring in somebody else. Phenomenal technology. They are a duopoly. It's not a field that's going away, and in fact, they're pivoting in the new directions as well. So I don't think that they're just going to be behind technology and that's it. They're a SaaS. They should be printing money. They're not. They've made a lot of mistakes. I am now seeing the company a little bit differently. I'll give it time to kind of play out. I would prefer to pay for a healthier company at a higher price than get in now. And Unity tends to rebound, honestly, when it does this for whatever reason. The stock has that personality. So I think it'll recover some. But it reminds me of like if there's a girl that you like and she's been dating this guy who's just abusive and awful for a long, long time. And she's taken it and she's beat up and just is all kinds of messed up. And it finally does a breakup. You do not want to date that girl right away. She's a mess. She's got to get her life together. She maybe need a psychiatrist or professional help, depending on how bad it was. And this was an abusive relationship between one of the worst CEOs out there. Honestly, I don't know why he was even hired. It's going to take Unity a while to recover. I don't know if there's lasting permanent damage. I think it's too early to tell, but there's a lot of more issues here than I thought. I thought CEO goes, old boyfriend goes, new boyfriend could come in, but it's tough, man. It is tough. I still did they mentioned profitability a year out? Is that correct?
Yeah, I'm not expecting profitability anytime soon. Honestly, I think they came in at $250 million loss. It's just rough.
And what about companies like Riccatello did a lot of things to burn bridges with developers. Is there any indication that is
so?
They're read on, honestly.
Yeah, the thing with Unity is that they were one of those growth at all costs plays, and really leaning heavily on the fact that they were a duopoly. So what happened there was they had multiple acquisitions yearly in 2020, 2021. These guys were throwing money left and right like it fell from the sky. They didn't really have any consideration about bottom line operational efficiencies, about any operating leverage, about reducing capex. Like none of that was a consideration. They bought Weta for over $1 billion. They bought SpeedTree. They bought all of these different individual companies. And right now, Jim Whitehurst, what he's trying to do is he's trying to consolidate into the core space so as to basically take advantage of the moat that they already have, as opposed to what Riccatello was doing, which is this spray and pray, grab as much TAM as you possibly can. And I do think that that's the right play. But I mean, look, I think you nailed it, right? We go back to that Uncle Charlie quote. It's better to buy a great company at a fair price than a fair company at a great price. And Unity right now has been beaten down. It's at $30 per share. And there's a lot of people who are staying away. But what I will say, it did fall 20% after earnings, and it regained a lot of that. I think it closed the day negative 6%. So a lot of people in the high $20 range are seeing it as an opportunity. They're saying, okay, well, this might be dead money for a couple of years, but over the long term, 5 years plus, I'm actually still going to see a return on this because I can see the writing on the wall. I can see the tea leaves. I can see where Apple and Meta are going with regards to the AR space, the whole spatial computing aspect of the business. And guess what? Unity is going to be the software layer. I've said this multiple times, and I continue to say it. Am I as positive on Unity to say confidently that I want it in a 5-stock portfolio? I don't think so. I think that especially the Capgemini news and reducing the bull case around the enterprise space, because the enterprise space essentially was supposed to be the thing that ties them over from the short-term gaming engine to the time when hardware is sufficiently developed that they can actually build for the AR space. And so it was supposed to be that interim revenue band-aid, essentially, that bridge. Now that they reduced that business, that's reduced from their TAM. It's reduced from their entire, I don't even know how to say this without saying the word, but their entire growth story. There you go. And so the story has somewhat changed for Unity. So what I will say, do I want to have it as a core 5-stock portfolio? Well, that's fairly risky, right? They're a company that's losing $250 million every year, and they don't have their shit together. And to Roy's analogy, they're that abused, girlfriend that might have still, some PTSD about John Riccatello, as I'm sure every Unity shareholder does have some PTSD about John Riccatello. But what I will say that is a redeeming silver lining about Unity is, am I buying more? Would I buy more? Yeah, I think I would buy more for a long-term portfolio at this price, because I do think that at this price, you have a risk-reward ratio, right? And it is a risky play, but it's also a $30 stock, and this thing peaked at $220.
Yeah, I mean, I wouldn't use the all-time high. I think there's been a lot of dilution, if I'm not mistaken. So
Sure.
the previous market cap's a bit misleading. It's kind of like looking at Robinhood and saying, hey, this could go back to whatever that crazy valuation was and it's like, no, that there's eventually, yes. And that's a well-run company. That's a company that's printing cash. They pivoted well. Unity, I agree with you. It's not a good company. I still think that they're going to do well. I don't see how they don't, honestly. But they're going to underperform as long as they have mediocre management. I don't know that Whitehurst is the guy, but he seems like he's making some good moves. I'm just going to have to watch the valuation. Honestly, if it gets down low enough, like if we're looking at like under 20, I will pick up some, if nothing else to trade, or just to hold for a bit. But there's no reason why it can't go that low. There's no reason why it can't just trade in a range. Probably most likely it's just going to trade in a range, but man, it is underperformed expectations again and again and again. So
yeah, absolutely. I mean, there's nothing that's really stopping it from falling below 20, especially with them selling assets left and right, because you got to keep in mind that back in 2020 and 2021, when they were acquiring these assets, they were diluting stakeholders. They were burning their cash pile, but at the end of the day, they were getting a premium from that aggregate, consolidated offering. And so now they're sort of unwinding that. And it seems as though, they have to spend several years to undo all the bad stuff they've done, to recalibrate, get in the right direction, and then get started, in their longer term growth story. And it's just a matter of, are you willing to wait for that as an investor? Do you have the patience? Do you have the risk tolerance? And do you have, the time horizon for it, essentially?
Yeah, we'll see. I'm keeping it on that small list of names. It's moved down a peg. So I'll wait on the sidelines and we'll see how they manage. But yeah, I think you're right. Long term, you're good.
Last question, Roy, before we hop off. Celsius reports earnings tomorrow morning before the bell. Any thoughts?
Before the bell is always bearish. No, I'm just kidding. Celsius, I mean, I there's a lot of expectations built in. That's the only thing I don't like. But that is a well-run company. They're filling a unique niche in the energy drink void, where somehow they've marketed themselves as a health fitness drink, and people are slamming it at the gym and in hospitals and different places. There seems to be a buzz around it, and I guess pun intended there. And even in Canada, where they have less caffeine, that you guys still like them. So, I mean, I think that it's one of those that's on the small list. I don't know that it's a company for me to invest in, but it's one that I'm definitely considering. I think it's well run. I don't know how earnings will go. My guess is it'll probably there'll be some misses. Just there's so much. Well, not necessarily misses, but missed expectations. That there's so much built in that they could triple beat and they could still fall. But long term, man, I think that they're going to do really well. I really do. For whatever reason, they filled that void like nobody else. They know how to market themselves, and that's like half the battle with energy drink. Honestly, if I'm being honest with you, as far as taste, they're very inferior to Monster. They are. Like Peach Vibes are pretty good. There's another couple of flavors that are decent. Like I'll drink them occasionally, but man, I don't know. But
that is a hot take.
They look sleek. They fill that void. They've marketed well. And I know that some people love them, and so yeah, I'm optimistic on Celsius, even if they fall as a result of earnings, just because expectations are so high.
Yeah, I think that's a hot take as someone who's tried Monster and Celsius. But to each their own. There is definitely a market for Monster, as their market cap will tell that story. I mean, best performing stock in the market, but I'm really excited. I think that they're going to beat numbers. I think this growth story has just been terrific. If they don't beat numbers and they fall, I'd be really interested in adding. I feel like that was one that ran away from me. It just went way too fast. It didn't let me accumulate in time. I started talking about Celsius back in the low $50 range, and now it's, I think 68 is something that it hit today or closed today. So
I think they're killing it. So it's a really solid company. They have a lot going for it. So yeah, if it falls, it could be a buying opportunity for you. I'm not ready yet. I'm still loading up on Tesla, but
so volatile. So I don't know. I think if it does well and if it beats, I think we can look at this in the $80 plus range very, very soon. I would not be surprised if this thing keeps running like crazy. So either way, I mean, I'm going to be interested to see what happens, but it's not like a crazy sort of make or break thing.
And it's such a clean bull thesis too. Like, Bros is one that I've talked with Matt on. I know he's a shareholder. I don't know if you own Bros. I looked at that briefly and I'm like, it's not for me. There's a lot of risk here, a lot of uncertainties. What happens to it in a reset, just in their whole model as far as franchises or not. Celsius is like, we've seen this before with Monster. Are they doing this? Yes, they are. It's like, all right. I mean, it's not rocket science. It's not Rocket Lab. It's not Palantir. It's just energy drinks, man.
Yeah. And just like with such a simple product offering, the differentiation has to be predominantly in the framing, in how you talk about it, in the marketing effort, in the branding. And I think they do that terrific. They do a terrific effort in that sense because they've essentially convinced a large group of people that, this thing is a pre-workout drink and this thing is like the healthy energy drink, which sounds like an oxymoron in itself. And so that has been a masterclass in marketing, right?
Yeah, I don't get it, but I mean, I like it. I do. And I like if somebody is like, hey, you want a Celsius? Yes, I'll drink it. But, just if you offer me the choice between that and Monster, I'm going to.
Oh, my gosh. I had breakfast with a friend, and and they were like, hey, can you make a coffee? And I was just like, yeah, sure, I can make coffee, but do you want a Celsius instead? And just like as the words were escaping my mouth, I realized, oh my God, they got me.
Yep, you're an addict.
Yeah,
So
exactly.
you might as well buy the stock. I mean, they own you already, bud.
No, I am positive on Celsius. I own a stake. I couldn't buy fast enough, man. This thing ran away so fast, and so
And this is part of your top 5 portfolio if you go that direction, right? Or borderline.
Yeah, no. If I go in that direction, it will be. I'm just not sold that I'm going to go in that direction.
Yeah.
I am selling some stuff, and I'm going to talk about that on the channel publicly, because I have cut some positions that I was in, and
good job.
And so far, that's been treating me well. But I also want to add to some other positions. On running is something that I'm looking at more actively now. It's something that I see it being talked around all the time. I'm looking more into their financials, leadership team, that kind of stuff, just doing some more homework on the side. Celsius is obviously one that I am very positive on. And yeah, there's stuff that I'm moving around. But yeah, Brett, I do own a pair, and super comfy. You know, I don't think I'm going to go back to the Nikes anytime soon. So I'm really happy with that.
Can I say one word on the Webull Robinhood thing?
Yeah, please.
So yeah, there was news that broke, I believe this afternoon, in Webull, which is a trading platform, Chinese company, but they have a clearinghouse here in the United States. They are going public the SPAC route, and so I don't remember the ticker. You guys will have to look it up, but the SPAC, the company that they're SPACing with is worth 300 or 400 million. And Webull was estimated at a 7 billion valuation. And so I have a post on X if anyone's interested, and they own both. Robinhood, it's just so ridiculously superior to Webull on every single metric, even if you're not including their 7 billion in cash that's that they're using, that they're generating revenues on, that they're willing to deploy. And they are just twice the market value of Webull. So it was interesting for two things. One is that Robinhood comparison, because Robinhood's gone on quite a run. And I'm thinking, okay, now we're entering fair value territory for me, from my perspective. But anything can happen. It could go wildly up. I think it will, because we are in a bull market, and fair valuation is usually just you see it for a minute and you just keep driving. But anything can happen. But when you see companies that are being SPACed, this reminds me of 2020, 2021, wild, crazy IPOs, SPACs all over the place, insane valuations. We're not quite there yet. The IPO market IPOs, I think that it's low. I don't remember if it's 30 per month or just 30 so far this year, but it's substantially lower than it was during the peak of the bull market. But we're starting to see some things cooking underneath the surface, that it's indicating that there's going to be a lot of companies they'll be coming out at that point. But it also shows the value of Robinhood. It's useful, at least for me, when you have a publicly traded company and you're like, okay, how do I actually value this? And yes, there are some peers that you can compare it to that don't do exactly the same thing. But then a direct competitor comes out that does much the same stuff, I think, in not quite as good a way, with just a couple of differences. And they're saying in the IPO market, like, hey, it's worth 7 billion. And it's Chinese, so it usually gets a discount. So it's like, okay, yeah, Robinhood, I'm in a good place with it. I'm glad that I own these leaps. They are printing like mad. So I love it.
So for Webull, and I haven't read up on it, but is it strictly ADR, like the depository receipts, or is it like you don't get any direct access to the actual underlying company, do you? Because it's a Chinese play.
I'm not sure. I didn't. I just read the announcement in Barron's, and then what they had on Webull itself. But I think that's correct. Yes, that you would. I wouldn't be interested in it just for that reason. I don't invest in CCP companies. Too much risk.
And I have in the past, and I think that's also one of the reasons why I don't anymore. Is you're not even owning that underlying company. And so if anything happens, like there was a period back in 2021 where like these the China-U.S. relations weren't great, and then a lot of these stocks were getting delisted off of the American exchanges, and obviously that's going to heavily affect the underlying prices of these assets, right? And so I like Webull. I use their screener exclusively because you don't need to have an account with them to use their screener, and their screener provides you a lot of functionality that is otherwise like paywalled.
And their charts are great. Honestly, they're better than Robinhood's.
And I think their branding initiatives, their marketing in general is really nice. I get that whole it's a clean UI, a clean user experience in general. So I like them. I think that they're going to be successful. But I think that again, we're entering a market where IPOs are becoming hot again. Right? We had ARM, we had Instacart, we had the Reddit IPO, which SOFI is going to be offering on their platform, not as an underwriter, but offering nonetheless. So we're going back into that market of IPOs, SPACs. Companies are finding it favorable to become public again, and that is emblematic of a positive market.
I love it, man. I love it. I'm excited for what the future holds. Won't invest in Webull, but for that comparison and just another sign that we're on bull markets last a good long time. Last year was a bull market. Oh my goodness. I'm going to owe so much.
Right.
Oh, that's like 5 times for me. Okay. Just get my checkbook. I'll use PayPal to send it to some charity. Just got to boost that. But no, things are really good. There's, I think, going to be a pullback at some point, probably relatively soon, but who knows, man. Silly things happen in bear markets. Silly things happen in the reverse of that market. And we get to hopefully experience that soon. Oh my goodness, Tom, you're killing me, man.
Okay, shall we wrap there, Roy?
Yeah.
This has been, these episodes are generally longer. We try to keep SoFi Weekly to an hour exclusively. And last week, the Bootleg Weekly was 2 hours. This week, the Bootleg Weekly is over 1.5 hours. That's testament to this format being more laid back, more freestyle. And I really appreciate, for the majority of that time, us having over 100 people here just watching us. So thank you for the support. Drop a like, share the video. And for right now, this has been the Bootleg Weekly, episode 4. We will see you all next week for another episode of the Bootleg Weekly.
See you guys.